Right, let's kick off. Thank you very much for coming everyone today. It's the Monday weekly market analysis webinar with LCG. Myself, Jasper Lawler. Apologies for sounding a bit bunged up. It's hay fever season. So here is the risk warning in front of you. I think probably everyone's had a chance to read it at this stage, so I'm just going to skip over to the trading platform. So we'll start with the Forex market, and I think a trend in general at the moment is that we're seeing some corrections to trends. And so this is a daily price chart for the euro. Obviously we've pretty much from having peaked in February around 125, we tanked one big handle down to 115. So pretty huge move that's taken place, but given it has been that basically that 125 up here down to 115 down here, you know, the big players that were involved in that distribution period up here and held on down to here, understandably some profit taking place, and it looks like based on this little trend line break that's taking place at the moment, coupled with this big bullish engulfing candlestick off the 115 level, that we're setting up for a bit of a period of a correction of this downtrend, so a bit of a push higher. And obviously the first test we're encountering at the moment is this series of highs through here, which I'll show more in the 4-hour chart, which is around 117.20, and this 20-day moving average, which we're testing at the moment. So let's drop down to this 4-hour chart. You'll see in a bit more detail that you know, we did a little false break of this trend line, tried to push to the downside, it was a false break, and now having captured some of the people trying to trade the breakout lower down here, we're now pushing up through this trend line and making a bit of steady progress higher. But as I mentioned, in terms of horizontal levels in the short term, you know, it's this low, you know, these series of highs, these highs here, which we're generally kind of challenging at the moment, and it is a decent area of resistance that could hold up. I suspect it won't, or we can push a little bit further higher from here. But the way I'm generally looking at things is actually based on this daily chart, the trend is still lower. We're still below the 20-day moving average, let alone the 50, and the 20 moving average is well below that 50 moving average. So between these two moving averages, obviously there's a big scope for correction, but generally speaking, to me, the bias is still to the downside. And it's worth noting that actually on a longer term basis, where we're retesting from the underside at the moment is decent previous support, which we've broken, now testing to the top side. Again, I think we probably can push through it, but I think we start to struggle once we get up to 118.50, which was this previous low here and this high that was tested here. Potentially, if we can get through this area, 118.20 and these previous peaks here, start to cause some trouble to the market. But you've got to take what's given to you. So for me at the moment, looking down this 4-hour chart, I think we're pushing higher, and there's no clear signs yet to kind of regain this longer term trend, which is to the downside. So for those who are a bit more aggressive, a bit more inclined to go counter the daily trend, you know, I think we are looking at a little period of strength here in the euro, but I'm just going to be, for myself, going to be watching that strength rather than trying to play it, because that strength could be undone at any time as we resume that longer term trend, and that's the reason I'm a little bit more cautious about following this upward movement at the moment, because when the longer term trend is lower, you know, obviously this 200 period moving average very much sloping downwards on this 4-hour chart, you know, the chances are that the trend just gets unwound quicker. So if we do get through this 117.30, call it, which is our current area of resistance, you know, I think we go up and challenge these peaks here, kicked off by this this little low over here. So set about 118.25. You could probably round it off to. Seems like a sensible next area of resistance if you're looking for a break through these highs here. Then once we get up to 118.25, if indeed it does happen, then again looking for potential situations where the market could roll over. So I'll switch gears to the pound. This is the 4-hour chart for the pound. Let's jump over to the daily chart, and again same idea, where, or even can be worth looking at the weekly chart firstly here just to get some context. We're in this steady uptrend for a while. We've broken it through the 50-week moving average. So to me, this is a pretty soft market. The trend's being reversed. Clearly, this could just be a larger correction. The trend line break was just one sign of a reversal, and we eventually push higher. But I think we'll struggle for a while to recapture up these highs at around 144. To me, the bias is downside. Even if we don't make new lows, still the bias is going to be down for a while. But again, we've kind of taken out this little short-term trend line, and we're testing the 20-day moving average. So opportunities potentially arising here, but I'll show you why I think they're probably not for the time being. Is that, look, this was the first sign that actually strength was coming back into the market, where we had two lows there and a break of this little short-term rising uptrend. So the break was there, looking to sell the market down to the lows and perhaps lower. But obviously the next period we just pushed right back above that trend line again. So that move downwards basically failed, and subsequently we pushed above this declining trend line and the moving averages on the 4-hour chart, and hence we're kind of pushing higher. But it's the same general idea as we're the trend has shifted to the upside on this 4-hour chart temporarily, but it's in a backdrop of pretty weak prices. So do you really want to go against this downward trend just because we've broken above a few short-term resistance levels and shown some strength in the short term? To me, probably not. And so I think we can push a bit higher, and it's a similar thing to the euro. It was this consolidation period, which maybe we can see slightly better on the daily chart. Perhaps use those two lows there, or those first two lows, somewhere in that vicinity, 135.50 to 80, I would say. Potentially an area which caps this little rise that we're seeing at the moment. So again, in a way, nothing particularly on at the moment, because it's quite a heavy downtrend, but we're starting to retrace the downtrend. So we have been moving down for a while. So certainly we could end up putting in a bottom here and seeing a bigger move higher, but we haven't really retested the lows or made a failure swing lower yet. So I still think the market can roll over fairly quickly, maybe up around this 134.50, which more like here. So certainly watch how the market develops, but at the moment, I wouldn't want to take any kind of trend line break like this, for example. It's much too steep. You can't really put any weight on that. As you can see, kind of little attempted breakthrough there, but it's too steep. So if we do put in a, another swing low around here somewhere, try to push higher and fail and go through, then, that's certainly an opportunity. But I suspect we probably push a little bit further higher before we get to that kind of opportunity. Dollar yen, not a particularly clear market for me at the moment. You can see that the 200-day moving average is basically flat, indicating no trend. We were rising nicely above the 20 period. We dropped through the 20 period, held the 50. So there is some resistance here from this previous peak, basically around the 110 round number is basically where that line has been drawn. So there's something to be said for if we can push through 110 and maybe back above the 200-day moving average, maybe we can push higher again. So this was just a deeper correction within an uptrend, but that idea of an uptrend not really supported by the 200-day moving average at this point. So there's the level again. you can kind of see what we're trying to push to at the moment. So if we can get through there, up through the 110, maybe we can push higher again, but it's the trend is just not altogether clear. Not a great market at the moment, in my opinion. What is looking a bit more interesting is the UK 100. So we had that big push higher to record, big move up to record highs, obviously. Then we had a decent pullback back down to 7590, which I've been highlighting for a long time as being a significant level. It's these two barriers from over here that we pushed through to the old record high. Didn't cause us much trouble on the upside here, which it could have done. We did just stall a little bit below it, but we did end up, once we did break it, noticeably, we paused there once the market had decided it was going to push through 790, 7590. It made that big up candle, made up the record highs and pulled back to it. And now we look like we're kind of made that little initial burst higher, consolidated a bit, and look like we're pushing with a little breakout today. So it actually looks quite encouraging for this correction to have ended. And if that's the case, we're back in line with that daily trend, and with, because you can see on the 4-hour chart here, this 200 period moving average sloping higher, and it looks like we're breaking up to the top side, confirming it. So FTSE 100 for its part looks strong at the moment, and maybe set for another re-challenge of those highs. Similar-ish situation with the DAX, but a bit of a false breakout on the short-term time frame, where we didn't make it up to new record highs, but we did push through that pretty stubborn resistance at 12,600, pushed through it, pulled all the way back to it, and we've been consolidating around there for a while, for the last 3-4 days, and just trying to having held that 12,600, consolidating and basically putting these highs in around here, around the sort of 12,800, I suppose, and trying to break out through there. What's discouraging and not as good a sign as perhaps with the FTSE is that this 200-day moving average looking very flat, and we're a bit choppy on the exactly where the price is. It's certainly not well above its 200 period moving average on the short-term charts either. So to feel a bit more bullish about the market, it's probably going to involve pushing up to higher prices first, which obviously I know means waiting for a higher price in an uptrend, but at that point that the trend will be a bit more clear. It's not entirely obvious that this correction phase has ended yet. Question about the sterling on the 1-hour time frame. Yeah, I'll drop back to that. So I don't typically have time to follow the 1-hour candlestick chart, but it's obviously a bit more of a kind of detailed version of the 4-hour chart, and you can see at the moment the trend is pushing higher. So if you're trading in lockstep with the 1-hour trend, to me it's higher, but the same risk goes with when I was talking about the 4-hour chart, is that general bias to the market is to the downside. So I'll be more inclined to watching for opportunities for this 1-hour trend to reverse in line with the daily trend, rather than trying to chase this particular uptrend higher. Hope that makes sense. It's a bit of a preference, really, whether you look at the candlestick patterns tend to be more reliable on the 4-hour chart, but you get a bit more detail and perhaps earlier entries on the 1-hour chart. So I would say the two charts largely are sort of telling you the same sort of information, but it's just a matter of preference which one you go for. Switching gears to Wall Street, so we had that, it's basically this, the old high here was at 24,870 or thereabouts, false break 1, false break 2, and we're still below there. So hardly an overwhelmingly bullish market at the moment. The European indices looking a lot better than Wall Street, It's a pretty choppy sideways market, so any kind of trend following techniques not really working especially well. A little bit of evidence that maybe this correction phase has ended if you judge on that downsloping trend line, but again it's you know, it's a trend line drawn within what is basically a pretty choppy sideways market, so I wouldn't put too much stock on this. I think we need to try and get up through 24,870, that old high, and then these two peaks as well. More likely, once we get up into this kind of region, more likely we see some other kind of sell-off again, rather than any great breakout opportunity. But obviously if the breakout does occur, you know, then we're back into more of a trending environment, and you can follow the trend. But to me, it's just a choppy market at the moment. If you are looking for a silver lining, you know, the main one would be that we had fairly solid support, broke down for it, dropped quite dramatically, but actually ended up putting in a higher low here, and we subsequently put on a higher high. So not a really dramatically bearish market as it could have been after this breakout, after this break lower. Bit of strength coming in, but still well below those old highs. So a bit early yet to say that we're actually in a bullish market. We're just you know, not weak enough to really trend lower from after this breakout. Gold potentially interesting here. So in the context of the daily chart, you can see we're in that range for ages. 1300 was basically the base of the range, or 1303 perhaps a bit more specifically. Depends where you want to draw it. Through those two lows perhaps, calling that a false breakout. And then we came up, we broke through the underside, came up, retested, and retested again. And then we broke this daily rising trend line, which you can see better on this 4-hour chart here. Break through it. So theoretically, if this break is to hold, you know, as long as the price remains below the trend line, something around 1300, then this break is still valid. So we're consolidating after this break of the trend line, mainly because if you kind of put it in this context, we're also kind of a bit sideways here. You know, this is quite sideways action, so it's not going to immediately drop off a cliff here. It's probably going to chop around while we're above this low. But again, looking at this daily chart, it does look like, you know, we've broken lower, retested, and then the eventual direction is lower down to the lows down here around sort of 1240, you'd call it. So potentially that's our destination at 1240 if this break from Friday has any merit. So basically watching for the market to hold under 1300 around that rising trend line for this continuation lower. And then if and when we do get the break of 1285, this low through here, that's when we can really get a bit more confident about the weakness coming into the gold market. And last but not least, oil. So a bit like some of the currencies, it's a decent uptrending market, but we've started to suffer a bit of correction here. If we do get back up through this declining trend line, you know, I'll start to feel more confident on the market again, but I suspect that was quite a big drop. People tried to buy the dip, but it was but the savvier players had already been selling and probably added to the positions here. And I suspect we probably head lower, and then the next areas of support, if we do head lower through this low, will be down at 72.50 and 71, which was this high back here. And potentially there, this correction ends, and we start to go back in line with the higher trend, which you can see via the moving average, which is moving higher, and obviously the 20s above the 50. So it's all in alignment of an uptrend, but I just think probably this correction has a little bit further to go. On a 4-hour chart, I've got the connection of that those two kind of daily swing points, but nothing too clear cut on the 4-hour chart for basically I wouldn't necessarily be looking for kind of 4-hour trend line breaks while we're below this, while we're kind of consolidating on a daily basis. This is more like these kind of trend line breaks are more what you want to see when everything's in alignment and you're pushing higher on the daily time frame. At the moment, we're consolidating on the daily, 4 hours kind of sideways. So we need some breakthrough on the longer term trend to then start looking for these short term trades to the top side again. So a little bit of a nothing market for the time being in oil, because we haven't quite had that confirmation the correction's over yet. So a little bit of a sit in your hands waiting for these corrections to show themselves up properly, whether they've got more to go or whether they're starting to reverse. Hopefully they start to reverse and we can start moving back in line with these daily trends. If they don't, we'll find we'll get better prices when they correct lower down. So I think I'm going to call it a day there. Thank you very much for watching, everyone. I hope that was useful. Good luck with trading for the rest of the week. I will look to send out a webinar with some of the details on the webinars we have lined up for the rest of the week. Thanks again. Jasper signing out.